let's talk about insurance and how can you align your retirement goal with what kind of life insurance product? What are the features and product structure that we are talking about when it comes to a goal like retirement? And also in terms of premiums, in terms of features and in terms of lock-in, what are the main aspects that you should be knowing if you're buying any retirement product from a life insurance company? I have with me Vivek Jain, Head of Investment Policy Bazaar.com to discuss more on this. Vivek, hi, good evening and welcome to the show. So we all know the concept that your investments and insurance should be, planned separately in different type of investment avenues. But we also know that life insurance, the right kind of life insurance cover happens in a lot of stages. You need to have a pure life term, which can be a term plan, a pure life insurance policy. You can go ahead with savings by having a guaranteed plan as well. And then retirement being a very crucial goal for a lot of us. And we've also seen that, more than planning it in an investment-based way, a lot of people prefer buying retirement products from life insurance. When we talk about buying retirement products from life insurance, typically what are those products that we are talking about? And we'll get into the aspect where we can discuss as to if it's better than any other investment avenue. But in general, what is the design of such products, Vivek?
So, Kavita, broadly, the retirement products from the insurance companies are two types. One, for more younger audience, people who are below 40 and still ready to take some market-linked risk. So we have plans which are market-linked insurance plans, wherein basically the policy term is whole life for whole of life, and you get market-linked returns. And typically, given how the Indian stock market has performed in the last 10 odd years, you can expect somewhere between 12 to 15% returns in those kind of plans. And these obviously are market linked, so this is not something that is guaranteed. But one very interesting feature here is that you have a systematic withdrawal option in this, wherein you can withdraw a certain percentage of your fund value anytime after 5 years and use it as your retirement income. If you are investing below 2.5 lakhs, then whatever maturity value you get and whatever pension you are getting, that will be completely tax-free. So this is a very, very unique feature in this kind of a plan. On the other side, if people are above 45 age and are looking to plan retirement, there are guaranteed pension plans, which are typically called annuity plans. Wherein you can pay for a certain number of years. Say you are 45, you pay for the next 15 odd years, and then you can get pension for till the time you are alive. And the invested amount can actually be returned to your nominee. You also have options of joint life, wherein you can add your spouse, and you can get pension for your lifetime, and then the spouse can get pension thereafter.
Vivek, I also want to understand now, since we've discussed about the structure of such products, we're talking about guaranteed pension plans. A retirement goal is something that, you should be thinking about or planning very earlier in your life. Now, for example, you've not thought about it till the age of 45, till the age, where you have all the other financial liabilities and responsibilities done with. That's the time when you think about buying a retirement plan. What will be an approximate expense in terms of premium, and how expensive would that product be? Because we are talking about if assume that 60 is the age where you will retire. Still, you have a very long time, where if you don't have any income, you better make sure that you are covered very well from your investments, as well as having the right kind of insurance. Because at that time, your medical expenses, especially if there's no source of income for you, it's very difficult to live off that corpus. So how do you figure out that cover that you need for retirement, as well as the kind of premium, and how expensive would that be? If you can just give me an approximate range of that.
See, I think how people should plan for retirement is basically they should, but if they are already at 45, they have about 15 odd years before they are retiring. But I think they should go in for guaranteed pension plans, because I think taking a risk at that stage may not be the most a wise decision. They may keep some money in market-linked plans, but most of their money they should start moving to plans which will give them guaranteed pension for lifetime. So if I talk about, I'm just giving you one example. Supposing you are at the age of 45 and you invest 20,000 rupees monthly for the next 15 years, you will typically basically start getting at the age of 60. You will, if you are taking it as a single life option, then you will get around 30,000 rupees pension for your lifetime. If you also include your spouse, then you get 30,000 rupees, then you get about 25,000 rupees. And after the policyholder passes away, the spouse gets that pension till the time he or she is alive. And the interesting part is that over 15 years, the example that I've taken, there you are investing about 35, 36 lakh rupees. That 36 lakh rupees gets returned to your nominee. So you're also leaving a legacy behind, apart from securing your pension for your lifetime. So I think very, very unique proposition. Why? Because this kind of really takes away the interest rate risk, right? If we look at last 10 or 10, 15 years, if you go back 15 years, I think the FD rates were closer to 9%, 9.5%. Today, the interest rates and FD rates are about 7 odd percent. And that also you will get only for the next 5 to 10 years, right? But here, but in a way, locking in your guaranteed return rate. If you're 45, say in a way, locking in your pension rate and the pension that you will make for the next 40, 45 years. So a very, very interesting option for anybody planning for retirement. I think one question that you had asked is how much corpus should they plan for? I think that is something basically they should look at some basic expenses that they have. Hopefully, if they own their own house, then there'll be no rental expense by the time they retire. So I think basic expenses and take inflation of about 5 to 6% for the next 15 odd years. And that's how you should kind of arrive at a monthly expense that you will require as your pension.
Vivek, last question to you, and then we'll wrap up the discussion. I also want to understand that because you're talking about retirement goal, how good a strategy it would be to be dependent on one particular guaranteed pension plan from an insurance. Does it make sense to diversify this particular goal also, having other investment avenues in the portfolio?
So see, it's always recommended to have a diversified portfolio. We should never put maybe 100% of our money in a guaranteed return plan. Neither should we at 45. It will be wise to put 100% of your money in a market link plan. So you should always diversify your portfolio. Put some money in a market link plan, which can give you upside in the long term, and set aside a large part. So that again depends on how old are you when you've started to plan retirement. If you are still below 40, I would say that you can go ahead with a market link plan because your appetite for risk is higher and you have a longer horizon. In 15, 20 years, the how the Indian stock market is going, hopefully you will get good returns if you have 20 odd years, if you stay in the stock market. But if you are somebody who is more closer to the retirement, if you're somebody 50, 55, then you should definitely go and put in most of your savings in a guaranteed kind of a pension plan. So it's always recommended to diversify between market link and guaranteed instruments. And depending on the age, the closer you are to retirement, more allocation should be towards a guaranteed plan than a market link plan.
All right, Vivek, thank you so much for being a part of this show and explaining our viewers as to how can they align a goal like retirement via a guaranteed pension plan from life insurance. Thank you so much for being a part.
If you like this video, then like, share and subscribe to ET Now.